All right, welcome everybody to Thursday's Bookmap Academy meeting. This is where we go through your trade markups, your journaling, and give feedback. So we've got a nice kind of group of coaches here that have lots of experience. And are we'll take a look at your trade markups and give feedback. As you guys know, as part of the academy, what you do here is well, if you go to bookmap.com and you click on the more button here, it's under here under community. If you're interested in joining or you want more information about it, you can read through it here. But basically it's a pathway. I mean, there's no cost to joining. You will need at least to have the free version of Bookmap. It's better to have the paid version so you can look at multiple markets. But you scroll through here, you can read about it, and you can sign up here. You will need a Discord account, and all we need is your email, really. And then you'll apply for the Junior Academy, and then you work your way up through the Junior Academy to Bookmap Academy to Coach to Streamer. So we have a pathway here for you. Anyway, let's move on and continue to show the Bookmap desk competition. Just take a photo of your workstation with Bookmap on it and put hashtag Bookmap desk on LinkedIn, X, or Instagram, and you'll be entered into the contest. You can win $1,000, 1 year of Global Plus Bookmap, plus data for one exchange. There's a runner-up as well for $500 and 1 year of Global Plus. So you can use your phone and take a screenshot there with the QR code and find out more about it. All right, our journaling or building out our playbook process here in the academy, very, very simple, very high level here. Number one, impetus, what's moving the markets. We need to understand that, and it could be typically it's fundamental, but it might be technical, it might be a combination. We need to know. Then we look at our key levels on our higher time frames, and then we start to develop strategies and scenarios around those areas. Do we want to go long? Do we want to go short? Are we looking for a reversal? Are we looking for a continuation? We take into account the time of day, and then it comes down to the setup that you choose. If you go through this and you choose the proper setup for the day or for that event, then your probability of having a positive outcome is enhanced. So you should know your checklist for your setup. You grade it, you determine your risk, and then you look at the order flow events to execute and manage your trades. All right, it's number 4 that we go over mostly in here to really get into the nitty-gritty for improving execution and trade management here, and knowing the setup as well. So yeah, Bruce's pilot program is a subset of that Bookmap Academy, and this was designed and developed to build out an edge. After talking to so many traders, just found that a lot of them didn't have an edge when they're trading, and that's the first thing you have to have. If you don't have an edge, you shouldn't be trading. And the problem was that traders didn't know how to build it. They didn't know how to if they had a setup, they hadn't back tested it enough to know that it has an edge. And that's what this program will do, we'll figure out that edge for you. Well, you will figure it out for yourself. There's a process, though, a structured process that will take you to a measurable, testable edge, and it's a very fast method in the trading and in the process or training. For more information on that, go to that More button, and right under that Academy link, you'll see Bruce's pilot program here. You will need to have Global Plus. Okay, so that's new in here. You'll see it here, and you can sign up here. All right. Okay, let's jump in, go through the disclosures. General disclosure, all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, so we will kick it off here. And I thought since last time oh God, where is it? I just had a good example. We were trying to get to Taboho. And oh yeah, here I've got it right here. So why don't we kick it off with him, because he was kind of last in line and we wanted to cover him last minute, but we'll go over. He's been doing some great work. He's been very diligent. He's working hard. He's following the right process and the trading in here. And I believe you are in the room here, so we'll invite you up. Oh, he was.
He was, yeah.
Yeah. What happened? Okay.
He's now speaker, but yeah.
Huh. Okay. Well, I don't know what just happened there. So, well, we'll come back.
Yes, hello, Bruce. I'm here.
Oh, there you are. Hey, all right.
Yes.
Welcome. How are you doing?
Thank you. I'm doing great, Bruce. Thanks. How are you? I hope you're doing great too.
Yeah, I'm doing pretty well here. And let's jump right in to your trade. Like I said, you've been doing some great work. So why don't you walk us through? We'll start there.
Oh, okay. Thank you very much. Yeah, this is one of my favorite trades, where I first observed that two-sided move before the impulse move, before the break of structure on impulse move. I thought it was noteworthy. I had taken a specific note of the feedback you provided to Vinfra that we should specifically make a note of that. And I always noted that horizontal structure, that as soon as it breaks, that would be an indication of the start of the impulse move. And I noticed the resting sell side liquidity, and could predict the low volume pullback. Yes, yeah, definitely there. And indeed, it happened. And I also noticed the buy side liquidity skew, which gave me an indication. I think we've been speaking about it a lot, that it provides the infrastructure for the next impulsive move. So that was one thing that I've gotten to understand about the setup. That once I see the liquidity skew resting there at the low volume node, I would predict that the structure is going to break, and therefore I should get ready to enter, and that's what I did. But this was a complex setup, because as soon as I entered, the buyers were absorbed by that resting sell side liquidity, and then there was the second low volume a pullback. I was not quite sure how to relate with it, because when I looked at the session volume profile, I did not see the low volume node. But nonetheless, I did make a note that the price did retrace briefly, after which it took off. But I noticed that the move was degraded a bit as the flow moved sideways, encountering that thick sell side liquidity. I think that's when I started trailing my stops very aggressively, because I was looking at, I remember, I think it's John who spoke about the institutional players wanting to trade at a high levels of liquidity. So I could see that at my target, that there is very thick liquidity line there. and I saw that the buyers will be interested to go and trade on that liquidity. So even though the price was moving sideways, I felt let me keep up with it, but instead trail my stops aggressively, so that if I'm stopped out, then I don't lose much. So that's why you see that I trade my stop. And indeed, after transacting through that liquidity, then my target was reached, and I was quite happy with the outcome. I learned quite a lot on it, and then I did my annotations and wrote my post about it.
Yeah.
So yeah, I think this is one of my favorite trades that challenged me at a lot of levels, but I was getting a little bit confident, at least especially in trailing my move, looking at that resting liquidity at my target level, and knowing that institutional buyers will be interested to transact at that level. Yeah, that's my thought about the trade.
You did really great. And guys, I'm just going to jump in on this one. Sorry, because there's a few things I wanted to say about the file structure that I created for the low volume pullback. I called some of the cleaner ones, the cleanest ones, simple. And then I called ones that are like not as clean, or there was like, I mean, my God, there was, these trending environments, and there were just multiple opportunities to get in. So, I mean, you could have, like, here you have low volume pullback 2. Here's another one here. I mean, there's another one in here. So there's multiple entries, or it's more complex, and that's the way I defined it. Just so you know. And I think you did just great. You're identifying these well, and you trailed your stop well. Everything you mentioned, you looked at the high liquidity up here. You waited for the break of the range in here, and then you waited for the pullback, and then you noted the low volume pullback in here, or the low volume node, and then that liquidity here as well. So you're totally spot on. As soon as it starts to break in here, you got in. You did just great. And the one thing that I really like, and then I'll turn it over to some of the coaches. The one thing I really like is from your work, and I'm going to comment on this to others in here, because there's a lot of others in here right now that we're going to go over. You have a bigger vision here. Like you're like you said, you learned a lot. How many times did you replay this?
I replayed it twice.
Only twice. Okay.
Yeah, I replayed it twice, especially because of that area I annotated as a low volume pullback 2. I really wanted to understand this. Probably it was more than twice, I think. Yeah.
Okay.
Because I really wanted to understand that level. Yes.
Okay. I think a lot of you guys, from what I've seen in this low volume pullback, or even the trendline break accumulation, the view sometimes is too myopic. It's too zoomed in, and you're looking at every little detail, and try to gain that bigger picture perspective, and wait and be patient and let it tell you what's going on. And I know it's a lot easier to say that than do it, but anyway, you do have this kind of a little more zoomed out vision here. It's really great. So with that said, I'm going to turn it over to David.
Sorry, I was on mute there, guys. Evening, good morning, and afternoon. Thank you, Bruce. Lovely charting, absolutely lovely charting, and well traded here, fella. Really good to see. Of course, for me, Bruce, the thing that's triggering my interest on these trades is just after 22:30 here, where you see that's yeah. Stick to the plan, David. But that the volume there is picking up, whether it's 4 times. Yeah, thank you. And also the angle, I know I keep saying it, and I could put a screenshot of my protractor if you want to, but the pace of bidding, that's that angle is shown at 22.31. That is showing speed intent. You've got the volume there. If you're not taking that trade at 22.31, great, not a problem. You've got a breaker structure. So if you don't get in, we're going to see later on with John, where John is on the trigger. You know, he's there, he's loaded, and he's pulled. Great. If you're not getting in, as you've rightly done, you're going to let it go up. Most of the times it'll pull back a little bit. So we are looking for that low volume pullback you've done, and then you're looking for the next burst, which you've rightly taken. Absolutely fantastic, and you've got yourself 9 points handles out of it. You've got some liquidity building up later on, but that's well after you've taken the trade. What is interesting on liquidity, but I know John will talk more about this, once that volume picks up at 22.31, the volume that's lower down around 72 on the book is just evaporating, Bruce. Yeah, it's just wilted away. They've given up the ghost. Whether it was just a telegraph signal of where we're going to go and we're not going to go, but yeah, beautiful. But as I said last week, just look for those little nuances that are coming in. You can see that before 22.30, can't we? Within that range area, you've got green bars, little red, green. You're already getting some nuances, some little tells that maybe, I'm not sure what the price action was before, but you're certainly getting some little fingerprints that something big's going to happen, and at 22.31 you get the footprint. Let me throw that mic to John, please, if I may.
Perfect. Just textbook. Yeah, the breakout of structure with high volume delta, and that's the key. That's what gets the ball rolling. You get a nice volume pullback to 80 that you mark on your chart with the CVP, and you also have a little bit of skew there at 80. And that shores things up. You get long. My target would have been at 90, where all the liquidity is, but where you played it is just fine. I especially like your stop management. I think that was just perfect. You waited for the low volume pullback each time to come back, and then you raised your stop underneath of it. So while there's an opportunity there, there's actually an opportunity to move your stop up there. So you read that very nicely. So yeah, print this one off, put it on your desk, and wait for it. Wait for the next one to happen.
Yeah.
Yes.
Have it tattooed like Dan. And we've seen these all day long, Bruce. I'm sure, if I trawled into my charts, I could stick some in the chat as John could. These happen every day, all day long.
Yeah.
Yeah, it's a good trade. It happens a lot.
Yeah, it does.
Taboho, did you have any questions?
No, not really. I think I am receiving the feedback especially about trade management and observing liquidity. I really did not observe, as David was pointing out, the liquidity from 22.30 as it was evaporated. I did not really observe that. I'm not sure it's what is its role as the price moves up. Should I still be observing that, or I should be focusing more on the liquidity above? That's gonna be like a magnet for the price to move up.
David, I don't know if you want to grab that one.
I look all the time. I can eat once I'm in a trade, if that's the point. I'm forever scanning and doing what you're doing in terms of moving around my take profits and everything. So yeah, I don't know if I'm quite answering that, Bruce, but yeah, I'm forensic once I'm in. Yeah, as I know John is.
Yeah, I mean, you're scanning the market above and below, but my focus would be above the market because that's where the preponderance of the liquidity is, and volume is trading to it.
Yes.
Right there. Exactly.
And what I also do, if I cut across everyone, I can see you've got NQ up there. Once I feel we got something moving, I will be looking, for confluence on NQ. I will have a little flick because I've got the feed on some of the individual stocks, and of course I'll be checking my options as well to see is this a bigger move? Is it worth holding? Is it worth adding to? All those sort of things.
Yes.
Yeah. No, great comments. I'd just like to add in something that I know, and then I'll turn it over to DNT and trading his life. But something that David noted about the angle and the volume. I mean, look at that volume. It's just dwarfing everything else. So
Yeah.
like this is moving. And I just want to, because I know this can be confusing of like, wow, there's liquidity here, there's liquidity here. It's what matters here is it's the context. Yes, this traded. Yes, this started to trade too. And but there's just more buy volume. So the context here is there's more buy volume. And in fact, you'll note these details of like as it kind of absorbs here or absorbs up in here, that's where the pullbacks come to a lot of times. And it did in this case. In fact, you see on the offer, then on the bid. And then, the other area up in here is the structure that it's starting to break or test. And then, you get that breakout or that next move, next impulse move. So as John had mentioned, it is this volume, aggressive volume, charging up toward this magnet of higher time frame. In this area in here, this is much more about the aggressors, yes. And that they have the power. They're in control, and they're able to move. So they'll just tear through this stuff. Happens all the time. I mean, you see it here, and you see it here as well, right? So that's the context to keep in mind about the context between that longer term high liquidity and these aggressors and that shorter term liquidity. Anyway, I will turn it over to DNT.
Hey, Taboho.
Hello, TNT.
Hey, yeah, you're doing really good. I posted another image that you did in the chat, and I thought this image that you did, this was a while back. This was at the beginning of the month, I think. But yeah, this one here, and your explanation of it in the chat, you posted this after we did a Academy webinar. Sorry, I was getting a call.
Oh, yes, I remember. Yes, I remember.
Okay,
this.
so you posted this after we did an Academy webinar, and I thought your explanation, you really comprehended everything that we talked about, and then you laid it out in your explanation with this image here. And so anybody who's looking at the low volume pullback and is curious how, the coaches like Bruce or I or others kind of like view this trade, I think really you summed it up really well, I think, in this post. You can't see it in this image here, but you posted an explanation with this image, and I think that explanation is a really good example for anybody that's curious about a continuation trade, the low volume pullback trade. This low volume pullback trade is a continuation trade, right? So I think you have a really good explanation here.
Yes, I think that's where I cited John's explanation about institutional players needing liquidity to trade, and that's what I observed with that trade. I think that was my explanation.
Sorry, guys.
Good one,
yeah,
I think it's a good one. So
there we go. DNT, I think we lost you, or can you guys hear me? Hello? Uh-oh.
Should I be paying attention to the upper liquidity or the bottom liquidity, or what should I kind of be looking at when I'm in the trade? You heard what David and John said just now, and Moby actually had said something about this in the previous webinar in his text. So he wrote some stuff down, giving some feedback to one of the other people here. So he's a coach, and he wrote down some explanations of how he looks at liquidity inside of the heat map, like when you're inside of a trade. And if I can try to summarize, and I think I might be able, I'm going to try. He said,
give it a go, buddy.
Yeah, he's saying when you get that liquidity, you're looking at that that heavy liquidity getting filled on the offer, and then once it gets filled, you're still scanning. You already kind of you're looking at the heat map, and you already have an idea of what the liquidity, where it's at on the bid. You have an idea of where it's at on the offer. Once that liquidity gets filled in the offer, you don't know if it's going to come back, but if you have a bid down there that's growing, and it could be attracting price. So once that offer gets filled above you, it's possible that it might go back down to that heavy bid on the bottom, on lower below you. So you just don't really know what's going to happen. So keeping an eye out of that heat map does help you in different ways. I hope that kind of makes sense.
Yes, it does. Thank you very much. Yeah, I understand it perfectly.
Okay, and then awesome. So one last thing, which is I wanted to ask a question. I noticed your take profit, you just kept it standard. Even though it was above that heavy liquidity, you still kept it. Is that something new you started doing? Where you're just going to start keeping it at 35 points or 30 points?
Yeah, I think what I observe where liquidity is resting, and if I observe that liquidity at my target level is not being pulled off, it's not going away, it stays, then I feel comfortable to keep my my target at that level, and not adjust it. And I also would observe whether is there liquidity building above my target level, where maybe I could potentially adjust it upwards. And if I don't observe that, then I decide to keep it at that level and just start managing my stops.
Okay.
So if I don't observe any change in liquidity, like liquidity being pulled off, coming in, I usually keep it where I am comfortable that it is there. And then I start going through
trailing.
Trailing, and also observing my reactions. How am I reacting? Am I learning anything about trade management, about my confidence levels?
It's cool, and it's nice too, because it's all in replay, right? So you can kind of you can try different things. And I noticed you used to front run liquidity, and now you're kind of just keeping it standard. And this is something that I kind of mentioned, I think last week. I had a hard time speaking last week, but what I was trying to say, hey Bruce, can you pull up? I don't know. Are you? I can't see your screen for some reason. Is it just me?
I can't see it either.
I've
been refreshing it mad as well, trying to get it.
Oh, sorry, guys.
Okay, while you're figuring that out,
I think I got disconnected here. So
good shout, DNT.
Well, the reason why is because I wanted to pull up an image that I had posted last week as well, regarding risk and reward. And the way that I've been approaching it is similar to your image that you had, Taboho, where you just kept the take profit right there, even though it's above that heavy liquidity. Like, you don't know if it's going to continue up there or not. But in replay, what this has done for me, I keep mine at 20 ticks and not 35 ticks. So I would have probably been right there at that liquidity, whereas you're above it with the 35 ticks. But I've been keeping mine standard at 20 ticks. Bruce, if you don't mind, if you can click the images that I posted 2 images. If you scroll up in the chat. Okay, yeah. This is just to show the risk reward, like the R factor here. Where if you look at this one to the right, you'll see my triangle that's red. That's a short position. So I take a short, and then I move my stop about like a point or so above that little horizontal structure, but I keep my take profit the same. That's 20 ticks right there, the take profit. And it's skewing the R factor in my favor. And in replay, what this is doing for me is just keeping it consistent for me. Where can in this setup, in the low volume pullback setup, can I get 20 ticks out of this thing? And if I want to skew the R factor in my favor, can I get the 20 ticks? But can I also skew the stop loss to the structure? And that's how I can make this kind of work, and that's how I could kind of make this trade or justify this trade, if that makes sense. And if you go to the next image, Bruce, there's one more.
Yes, it does.
Hold on a minute.
Oh yeah. Okay, this one. This is another short. This was a bad short. Don't get me wrong. We're not discussing that. I'm discussing the R factor here. If you look on the left, in the middle of this image, yeah, there's my short right there. And then I keep my take profit the same, but I tighten my stop to this little microstructure right here, like a 1 point or 1 point, 1/2 right above this structure, and I skew the R factor in my favor here. So it helps me take this setup. I could probably take this setup and take 2 losses, and I can take 1 win, and it'll make up for those losses. That's kind of the idea. This is how I've been approaching it in replays.
Yeah.
Just keeping my take profit the same, seeing if I could get that scale, maybe giving me more confidence in the live market, and tightening it to structure. I'm not sure. That's all I had to say. I don't know if anybody had feedback or wanted to say anything else, but hope that helps. Taboho, I don't know if you had any questions.
Yes, it helps a lot. Is it a good strategy to observe liquidity and only adjust based on the liquidity coming in and being withdrawn, or I should use your strategy, DNT, because sometimes I adjust when I observe liquidity. It's a bit shaky, and then I would adjust it to a level where I'm comfortable, be in front of the liquidity, and then I get it.
Yeah, go to the other image.
Is that a good strategy?
Again. And then, yeah, this one here. This is a good example. This is the same example that you just had, where you have the take profit just outside of that heavy liquidity. That's what you're asking. So that's what I think. This is just in replay. And I mean, what do you think, guys? What do you think, Bruce or David or?
I like it. Go on, Bruce. My bad.
No, I mean, I think, so I have another module for the pilot program coming out on risk and account.
You can't hear Bruce.
Okay.
I hear you okay.
You can't hear me?
I can.
Okay.
I can hear you good.
Okay.
Well.
Yeah.
So anyway, yeah, we have another module coming out on risk and account management, and exactly kind of what you're going over, but I think this it'll be tightened up more. I know you're looking at 20 ticks, but what if you need to give it more room or less room or whatever, and then then it's about sizing your position at that point. Anyway, we'll cover it in the near future. But this is I think this is effective and simple, blunt.
Yeah.
But I like it. There's a million, or not a million ways, but many ways to do this. John has his own way. David has his own way. DNT and now has his own way, and trading his life as well. So otherwise, what happens is you take a trade and you don't. The market doesn't care. So how much room can it run? If it's volatile, it's going to run a lot. So do you want to widen your stops out? Well, then you're going to be taking too much risk. So how do you address that? And we'll get into it more. But those are my comments on it. I don't know if John or David or trading his life.
Yeah. If I rudely chip in, I and again, for those guys and girls that see some of my posts and think, hang on, where's his stop? His stop's a bit wide. I no longer do this risk to reward ratio. I think it's fantastic. But I don't. I take a trade. Those stop and take profits are typically thrown in. It's on Bookmap. Not always thrown on Bookmap. Thrown in by Ninja. You've all seen that. Then I'm thinking, okay, first of all, where am I going to put my stop? So I'm looking at liquidity. I'm looking at structure, and in the current markets, it will be well below where we are. So if it goes the wrong way, I am going to get beat. But then I'm watching. I just want to get the stop out of the way to start with, while I see how it pans out, and then the take profit. Particularly, where I've got multiple contracts on. Again, repeat the line. Those that have seen me trade within Discord, you'll see I am putting money away. I have to put money away. But then I'll be like today. I had a really high level on NASDAQ that took quite a while to get there, but it did eventually get there because I've got the luxury to allow it to do that. And then there's other days, again, I've talked about where I'm using Ninja's automatic tools to snap the stop loss when I'm literally a couple of points up and it bangs in there. So again, I'm just putting money away, burgers and fries, as Tom would say. But I've been able to do that simply just through thousands and thousands of hours of screen time. John, help me. I think you're a bit like me. You're more brutal, mind you, aren't you, where you put your stops?
That sounds familiar, David. We are trading multiple contracts. I calculate an initial risk. Am I in the ballpark for my risk tolerance? And then I'm dynamic from there. I'm always trying to take risk off the table, taking that first contract off, and then managing the exposure on the second, but letting the liquidity dictate that, and the load, the pivots, and all that kind of stuff. But I only calculate initially. Is this reasonable for me to even explore? And then I just work it from there.
Yeah.
So David,
but this is great discipline to start with. This is, because if you don't, you're just going to blow holes in your accounts and everything else. So you need this discipline. You need this for sure.
Yeah. John, are you? I mean, I know you have a really tight stop. You like that. You're looking for it to go, and if it doesn't, you get stopped out. And then the management is great as well. But with multiple contracts, so are you kind of just eyeballing it and looking at, okay, that's 2 points or a point, and therefore I'm going to put on 3 or 5 or and then I'm going to take 3 out at a certain area, or because it's kind of hard to do that dynamically, and say like, oh, this is how much I want to risk. How many can you put on?
Forgive me, I'm not sure I follow you. To tell you the truth.
Well, so let's suppose that you're going to give it a certain opportunity, 2 point stop loss.
Mm-hmm.
And then on another opportunity, you're going to give it 1 point stop loss. And then, but are you going to size up the one stop loss point, and so all the risk is the same, or are you just kind of eyeballing it and just going, well, I'm willing to accept that?
I see. Well, I'm scaling nearly everything, and like David, I put something in there just to get it on the board, and I usually have my targets already established and in there. But yeah, I mean, generally 2 to 1 is a minimum that I'd like to risk to reward initially, and then taking that first one off. That might be 1 to 1 at times, but I get it so often that I'm willing to take that. As far as the tight stops, I'm trying to come with volume. When I see volume coming into the market and I see icebergs coming into the market, I'm going to trail that pretty quickly, because if they quit, I want to get out.
Right. Yeah. Right. Okay.
So that's it really depends on the context of the trade, and I try to keep it that way so that I'm in tune with what's going on. I don't like fixed amounts. On the automatic function in NinjaTrader, it throws it out there on a fixed basis, but I'm moving it immediately. I'm just, it's just something to where I can save myself a stroke of the mouse to actually place it. It goes in automatically. And in this environment, if it turns on me real quick, I have something in there to avoid a catastrophic loss.
Yeah.
But I try to avoid the fixed amounts other than the ratio. The ratio is intact. Yeah.
Okay.
And if there was a question within that, Bruce, sorry,
Uh-huh.
if like there's a trade, I put one trade in the chat, which we might get up shortly on NASDAQ, which was a reversal off one of the option levels. There, I've gone in with a single, and then I'm quickly adding to it. That's the one here. Quickly adding to it. But then there's some other trades, particularly on oil. It's like I can see the whole thing is just about to collapse. There's some news headlines, and then I'll go in with multiple contracts. I'm not bothering to scale. I just want to get in and get out. This trade, I might throw under a low volume pullback, Bruce, and this was to the earlier chat in terms of the volume bars, and you can see my volume bars are. I know DNT is going to love these, but this was early on in the frame. I'm London time, so it's in the first sort of 40 so minutes. To recap, the market tanked down early doors, let's say as it would. Here on NASDAQ, as John will talk more about on the left-hand side, we've gone into some key gamma. Thank you. Into some key gamma areas. But like I've been hinting about, as that price is coming down, and actually this was a higher low on a more medium time frame from the open, the ORB. But you can see the green bars as we're coming down, we're starting to buy. The final sell down is low volume. In comes some really nice ice. And then there's that massive buy, green bar comes in, and then I'm adding, and off we go. And this went up. It went up several hundred points, I think. John, help me on the option.
This here is what you're talking about.
Yeah,
okay.
yeah. I mean, that's a killer. And then but this is from today. This is using the techniques we're all talking about here to take trades in the live market. And as you can see, I was carrying 4 by the time the screenshot was done. But this started with a single.
Yeah.
Okay. Oh, great. I mean,
he wants me to help him, Bruce. I couldn't pay his taxes with what he makes.
I think
yeah. How am I going to help him?
These levels today, they were absolute killer. They really were.
Yeah.
They were just not quite to the tick, but come on, look at it. This is NASDAQ as well. It just sniffed over the call wall. Just had a little look.
If I could just, if you don't mind, if I could just try to bring it back to what I was trying to accomplish with that replay idea. Keeping that take profit consistent, let's say that 20 ticks, like we were just talking about, just for instance, that would be, in theory, your first scale. So that's how I see it. And John mentioned that.
Nice.
You would need to explore it. If you can't even get 20 ticks, why would you explore it further than that? Or if you can't get what your standard is, then why would you explore it further than that? So with that putting it at 20 ticks does, and keeping it there, even though it's past heavy liquidity, you still want to see, I still want to keep it there just to see if I can get that 20 ticks. And then to offset my risk or my R factor, then I'll just tighten my stop. But I want to at least see if I can get that 20 ticks. If I can't really get that consistently, then I'm probably not going to want to explore it much further. So that's kind of like what John had said. I'm basically playing off of that. I really kind of just want to see if I just could get that first scale first. And that's what replay is doing for us in that sense, where if you could get your first scale, let's say on if you trade 2 lots or 2 contracts, you get your first scale, then you're good, you're set, your risk is covered, and you just let the runner do its thing. You either make money or the trade scratches, but you don't lose money. Or if you do 3 lots, you could just go on and on about this, but what matters is if you can get some, for the people who do trade multiple contracts, what matters is getting the statistics or understanding if you can get the first scale off. That's the most important statistics that you can probably gather in replay and back testing and stuff like that.
Yeah, that's why we cover hit singles first. Learn how to hit a single.
Yeah, that's confusing. Yeah, because my first contract may come off at 12 ticks, 3 handles. And I don't think the market cares about 20 ticks.
No.
I think it cares about liquidity. So I think that should supersede anything fixed that you have in mind, because the market doesn't care about that. So I think that's kind of foolish to see if you can get it beyond liquidity. Why would you want to ask that question? I just want to be consistent. And the most consistent way is to front run the liquidity. Take your money, cash the check, wait for the next one.
Bruce,
in a live market environment? Yeah.
Can I get you to pull up my next chart? Sorry, Bruce.
Guys, you're killing us here.
This is about take profit. So this is from yesterday.
Okay, hold on a minute here. I'm all thumbs today. I can't. Here we go.
And this is about using liquidity.
Okay, got it.
Okay, so this was yesterday was so the red circles show where the liquidity is, and you can see where I've got my exits in. You can see some of those have been a long time, and that. So to the wider question, I've taken earlier on, as those that were following me would have seen, and then I'm placing my partials all the way up at liquidity. That's what I'm doing. You can see, there. Yeah. That's what I'm doing. Just letting the market come to me. Let the market come to me. But I've taken some off earlier on. That rigor that you're talking about, D&T, making some money, putting it away, happy days, and then I'm just letting this rally away. Yeah. Yep. Letting the market tell me where I've got to put it. But yeah,
that's the key. Let the market tell you. You're not going to tell it.
Exactly. Yeah. It doesn't give a damn.
Doesn't care less. Yep.
No.
Yeah, I'll always try to front run liquidity or target, because it always will go to it, maybe 2 ticks, and then just turn around right before it hits it anyway. So yeah, in the live market environment, the way that I've been placing my stops is I know Owen. He just plays. He says that he uses AI to see what his threshold should be. so it's funny to see how everybody else does it, but the way that I do it is I use like a 20-day harmonic, and it's almost like a 20-day average of like what the harmonic rotations are. And so over a period of 20 days, you gather like the statistics on the rotations up, the rotations down, and then you could base like impulse rotations based off of that, or a regular or normal rotation based off of that, and that's kind of where I place my stop.
We'll get more into this, guys, soon. That actually I was actually going to hold off on it. I've already got the work kind of done. I just need to polish it a little bit. But I guess we should get into it. It's so vital. But right now, like the way with the program and the way it's going and the bigger picture here is we're just trying to gain confidence and build an edge.
Yeah, agreed.
Then, like in the forward testing, we start to get into the trade management. You guys are doing the trade management, but like it just hit singles. Get good and then get good at trailing your stop if you want more out of that, and that's great. We'll get into a basic plan for risk management and account management as well. It's pretty simple. It's pretty straightforward. So it shouldn't be confusing. Poor trading is life. We're like chatterboxes over here. So
David's gonna stick himself on mute now, and I'll say goodnight later on. Okay.
So I don't know if you have any comments or any questions for Taboho, or any comments on any of these things, especially with the stop management.
Nah, man, you guys beat this to death. I mean, what can I say? So, Boho, I just wanted to say, wow, man, you're doing a phenomenal job. This is what the pilot program is all about. You're very active in the rooms. I remember your first trade when I commented on it in the room to where you at now. you come in, you attend these academies on Thursdays. This is what I keep saying. This is how you really learn. This trade is phenomenal. It broke structure. You was patient. You waited for the pullback. You waited for it to hit the same to hit the level again before you entered. You target liquidity on top. You trail stop after it made a new high. I think you trail stopped your trade well. That's exactly how I did it. I think you exit where you should exit it because you have heavy liquidity on top, heavy liquidity in the bottom, which is all it's gonna do is get you in chop and get your emotion all tangled up. I think you like David said, this is a textbook. Print it, put it on your desk. With whenever in doubt, just look at this trade. I think you executed this trade perfectly.
Thank you very much, Trading is Life. You are one of the people I really credit for my fast development because you'd always comment on my post, especially my stop loss placement. You'd always comment on that.
Yeah,
Thank
and you've been following it, and you executed this perfectly. This is exactly how I would have traded it and followed my far as I'm just gonna touch on it briefly. Far as trade management is what I do is I kind of similar to what John do is based on what your emotion is. Like if your stop loss is gonna be too wide with two contract, then you go one just to keep it. And if it's still too wide with one, then sometimes you're just gonna have to miss the trade. And far as your target, I adjust it based on where liquidity is. Sometimes my target is beyond liquidity, and I know it's gonna, especially with this with liquidity on top and bottom. I know this is gonna give me a pullback. So as soon as I touch liquidity, I'm out the trade. I'm not giving it no chance to take back give take back what it's giving me. So I think you executed this trade perfectly again. Back to
thank
you.
you very much. Yes, and I've been able to retrieve the journal entry of that trade. DNT showed up from the Bookmap Journal website. Yeah, I recall this trade. It was after Thursday, April the 2nd, mentoring session. So I took it on the 4th, and it was my first complex setup. And I did in that after that mentoring session, I now felt confident to take the first complex setup trade, and I referred to the discussions that went on during that session. And I've been itching to post this on social media, but I was not sure of Bookmark social media guidelines. So I've been keeping it within myself. I was hoping to contact Dan to ask him about the social media guidelines of posting this because I got a lot of good feedback also from the community within Discord about this trade. So DNT, thank you so much for pulling that up. I've looked at it and my journal entry about it.
Yeah, it's a beautiful one. I think it's a great example. I'll probably point future participants to that example. So thank you. Good job.
Thank you.
You talking, Bruce? Are you on mute?
You guys, okay? You couldn't hear me. Sorry. Yeah, I think we beat that one into the ground. And thank you, Taboho.
Great trading.
Really,
Great trading, Taboho.
really
good, buddy.
Amazing stuff. And I would recommend just one more thing. You traded it twice. You traded it perfectly. You maybe try a couple more times. What else do you see? There's nuances in here that will start to like David was mentioning, the angle. Now, as you can see, it kind of taper off here as it is hitting higher liquidity. So a lot of things to learn from these by replaying them again and again. Anyway, let's move on. Thank you, Taboho, and let me get into...
Thank you very much, Bruce, and to all the coaches.
Very welcome, buddy. Take care. Speak soon.
And let's see here. Why don't we jump over to John, and who do you have here? You've got
Nobody's here.
No one's here. Oh, okay. Well,
Yeah.
huh.
Nobody's here.
Okay.
Do they still get the file, Bruce?
Yeah. I'll put it into the Bookmap Academy chat.
Okay.
I've been pretty bad about that in the past, I have to admit. So
I just didn't know. Okay.
Yeah. It's always like it's so just drained at the end of the session.
Of course.
And then I forget the next morning. So
I'm moving to Brooklyn to come and help you, Bruce.
All right. I like it. Excellent.
John can move south. We'll work out a start.
Goodness.
So let's see here. David, and let's see. I know you've got a bunch of people in here.
I've got John. John's going to talk about his own trade. I got John. I've got Vimfra, who is in, and I've got Wingle.
Okay. You know what? Since why don't we cover John's trade, and Vinfra, we'll get to yours right after, and we'll just jump in here. All right.
So this is a short by John. I mean, it's always a pleasure, John, looking at your charts. John is a master. He is a master craftsman. We see that, John. We say that every time we look at his charts. They're so perfectly matched up. He's checklisting. He's waiting for things to come. This is an open trade, John, isn't it? This is the start of the session. The price scoots off. I'm going to talk about opening range bar ORB. It scoots off high up. John is looking out for the gamma level. Mm-hmm. Look at that angle, Bruce. I love talking angles at the moment. Look at that sort of like, I think I put in it's about sort of 30-degree angle. We're going up. So there's a fair bit of pace. So we're not going up too fast, but it's an opening bell. We're going up. There's some jaggedness in it, so that tells you something. It's going through some passive liquidity. It goes to that key gamma strike, and then it starts to run out of juice. That champagne thing, as John's marked out towards 3. He's got his structure box in. That's drawing tools, fantastic on Bookmap, Bruce. Love that. Your volume bars are a bit low here, John. I don't know what's happened there. Maybe I'm thinking about mine.
You're right. They are. Yeah, that's
they are
my
lovely.
intent. Yeah.
Okay. Yeah. And this is really aggressive. This entry, in which John's going to talk. This is really aggressive. I love it. This is he's getting the movement. He's reading it like a book. There's the lower liquidity that's come in, as we can see, around about 17-15, and he's in. He knows where his stop is. His stop literally is a couple of ticks above his entry, so it's binary. It's going to work or it's not, and it's picked up. He's picked out his target, and it's going down. I don't see any ice on this chart here, but I am going to throw the mic over to John. But this again, Bruce, is so a classic 101. This is opening. You get these right, you can come in, as John will talk about, 2-3 contracts. You've got 8-9 points on the table. You can be one and done, and then the market can chop away all bloody day long in a Hell's Kitchen, Gordon Ramsay approach of the market. But you're gone. You've completely gone. John, correct me. Help me, please.
No, you're right on. A few things to add. The key gamma level, that's huge. We did go past that a little bit. And then liquidity started to fill in below the price, below the market. You see that to the right, Bruce, where liquidity starts to come in. Liquidity stayed in the market at 15, but also just under my entry, there's liquidity starting to build in.
I'm sorry. Are you pointing into
yes,
here?
Sir.
Okay.
Yeah. Liquidity starting to build in. Liquidity stayed in the market at 15, the key gamma level, and then above, looking at the second column over to the right, the delta column, you see that was all buyers up there. And so the potential for that look is for those buyers start to feel trapped. So if that gives way to the
Nice.
downside, they're going to be the first ones to bail, and I want to trade with them. And that's what you see there. You see that
Yeah, that angle. It's
that
huge
falls
coming
out
back
of bed.
down.
They're like, oh my, or worse, and
Yeah.
and down it comes. Yeah, and that's
Yeah.
why my stop is right where it is, because if
Yeah.
that scenario reverses, I want out.
Yeah. Sure.
That's why my stop is there, because I'm seeing that as, oh my, I wouldn't want to be long up there, and they probably not
No.
going to be either. As soon as it starts to fail, then I'm in, and I got aggressive here. This was, I didn't take a partial. I loaded the boat on this, and
Beautiful.
Nice.
and with that liquidity showing at 70-15. Yeah.
I can't stress the angle enough here for the opening. This is the opening, traders. So the bell's gone. If this was a really strong move upwards, and I'm sure someone's going to dig out a chart, and say, oh, hang on, David. But it's pedestrian going up, isn't it? It's not aggressive going up for the opening bell. It's almost wanting to fade. Yeah, thank you. It's just, beautiful. And the way it comes down, as you said, it falls out of bed and some, doesn't it? The
Bring it
hangover.
down a little bit, Bruce. Am I showing the CVD setting on this one? I meant
This
to.
is
Yeah.
the chart. Yeah.
Yeah, on the CVD setting, I have this set as the chart range. I think when you first open the CVD in Bookmap, is the
Session.
default setting set to a fixed point, Bruce? Is it not?
There's a couple of different settings. I forget which one the default is, but
It seems to me like I always find, well, I'm always changing it because I want it on the chart range. I want to control how that's being calculated. So if I have this set to the chart range, it's going to begin the calculation to the left there.
That's right.
So what I'm looking at and what I'm seeing is that CVD a bit more responsive. It's not considering since last night or the early morning session or even the open. I think it defaults to like the previous close, to the session start.
Yeah.
Which
Mine's
is the
on
Globex
session. I might
opening. I
change it,
believe
actually.
that's where it defaults to.
I
But I've made that note there because I want to be able to control that duration,
Right.
and that's why you see that cumulative volume delta respond quickly like that, and that added to the argument to get short.
Yeah.
Yeah, you have it on the black line here is the 0 line. So this is chart range, and
Yeah, exactly.
So
Yeah.
so I think the three different settings are something like, do you want the 0 line in the middle? Do you want it to be starting from the left, or do you want it to be I forget the other one, but it's more about the 0 line, I think. Anyway, something like that in the chart range.
No, but it says indicator range, session range, or chart range.
So yeah, session range, and then and so it'll calculate from the session. There's the calculation is going to be totally different, like you mentioned.
Exactly. That's my point. The calculation is going to be totally different. I'm selecting the chart range so that I can control when it starts.
Right.
Yeah. And I just wanted to make that distinction because it's a bit more responsive there, rather than just referencing all the data going back to the session start.
Right. Okay. Let's see. Quick question I had for you, John, and then I want to turn it over to the coaches. Is on this in here. Hold on, boy. Sorry, guys. I'm all over the place today. So I get it, and I can see the details, and I can see your thinking here, because I know your thought process here. You see that high liquidity here, and then you see them take it on, and then they trade through it. So once you see that now, and you got that, and you got your key level here. And so now, is it going to play out or not? You got the all the passive accumulation. You got the higher time frame level, or your options level in this case, and then you got the break of the structure, and now very aggressive, like David said, with the aggressors, because it's more over here. So my question is though, did you get stopped out on this?
No.
Okay, so your stop was the stop up here?
Yes.
Okay. Got it. I thought it was somehow like right below it there.
No, no, the
Okay,
stop was exactly where it was showing. It's 24,
around
24 and a
24.
quarter,
Got
something
you,
like that.
got you. Okay,
Yeah,
okay.
yeah.
And
Couple
well,
points. Fine. Beautiful.
beautiful, beautiful stuff.
Yeah.
And as you guys know from like the trend line break accumulation, how once it does that turnaround, this turns into low volume pullbacks on the way down.
Yeah.
So this is kind of it here, the first one.
Yeah.
And then you don't really get anything in here because they're just getting stopped out and just wrecked.
Torn.
Yeah. So this is maybe your smallest one in here, but anyway, you get the concepts.
And the other thing to note is like what David was saying. You know, I've got one eye on the Nasdaq, and it's fallen out of bed in a big way.
It's tanking.
And that helped. Yeah.
Nice.
Yeah.
Trading is life. Please, please, let's hear your voice. Jump in. Are you there? No, you're on mute.
Yes, I'm here. I was on mute, trying to get
Okay.
off of mute. Well, it's John. I mean, not really too much of a comment. You know, I think he traded beautifully. Actually, I was learning instead of I was just absorbing as you guys were speaking. So, right back to you, Bruce.
Every time we turn it over to you early on, like you always, well, I don't really have too much to say on that one. Anyway, we'll find another one. DNT, any comments?
So, okay, there's a short where his arrow's at, and you know, I do this as well. I'd probably be where I would have shorted as well. If you go to the right where it breaks low and then pulls back into that structure, that would be that could be. You see, it's the same entry. It's the same entry if you go a little bit to the right. Yeah, and then if you just waited for the market to actually break down out of the structure and then pull back into that structure, that is the same entry. So you're just waiting in the case of for the market. You're just waiting for the market to kind of give you an idea or give you to show its hand in this case, and then it pulls back into that structure, and then and it basically gives you the same entry. So the entry that John took, if I took that same entry, which I likely would have, I would call that an aggressive entry. And if you waited for the market to show its hand, for it to break low and then pull back into the structure, which offered you the same entry, I would consider that a less aggressive entry. I just analyze the same stuff on my entries as well, and it often happens if you just wait for the market to show its hand and then pull back into that structure, and it almost very often gives you the same entry if you're sharp enough to catch it. But notice, like, you're selling into that buying. So the buying, that's the pullback, that's decent buying there on that pullback. So you're selling into those buyers, and it's not an easy thing to do, but you know, you already kind of waited for the market to show its hand, and your entry is just as good, but you just waited for the market to kind of give you a different signal in this case. And that's just something I analyze on my trades. Just thought I'd mention it.
Yeah, fair enough. I mean, I think, you know, if John were or were not on the call here, it wouldn't matter. I would say, like, I think this is a good entry because he knows what he's looking for, and he sees these aggressors take on these buyers here, and they got enough behind it. So in this case, he's kind of shying away from the volume bars because he's got his key level. It's above it. He's looking at the Nasdaq. All his other criteria is fitting. And the one thing, the caveat, at least from my side or my perspective, is you might not get this move. In this environment that we've been in, a lot of times, I mean, look at the rest. This is the only, you get this little jag in here, but boy, it just goes, and it goes quick.
That's right, Bruce.
So if you don't get, you might not get the chance here. if he's got everything lined up in here, I think it's, and I'm not arguing with you, DNT. I think what matters is the context here, because if you miss this, this might be the trade that you missed for the day. That was awesome. He's got his stop up here, and we don't know if this would have gone straight down and then pulled back like this, before it went down again. Anyway.
Because what this is also like, if I cut across that, Bruce, the chart I've shown earlier on from today's trading, this is lower highs. You could draw a line coming down from the peak there, and you've got that lower. That's it, yeah. And it's the reverse of what I was showing on my Nasdaq trade earlier on. It's not as sharp as John's here, but the same idea. Like, yeah, I can see it. We're going to go back up here. We're going to go down. Bang! I'm going to go in. I'm going to have a go.
Yeah. So that's where, like, I would say to others, like, it's up to you. Like, he got aggressive here, but he's got all the criteria lined up. It's at the open. This might be your only kind of shot at it. And he does see something. He does have something really good here with this transaction right here. It's really about the key level. And then above everything above it, and then he knows that's the trap.
That's the trap.
Yeah,
yes, sir.
And
that's the key. They had their opportunity and they failed. Now they're going to bail. So
right.
A lot of times you don't get that pullback in this circumstance. Yeah,
and that's the risk. And then it's a question to you as a trader: do you want to take that risk or not? Yeah. You would have gotten basically the same entry.
This is a good point, because I take this similar entry, should I say, in that low volume pullback trade. So I'm not asking you to bring it up. I mean, viewers can just simply rewind it, and they would see the image that I posted, which was small arrows showing large buy bubbles. This is the opposite. I took a short, or maybe not the opposite, but the buyers were trying to lift it. They were trying to lift it, and they couldn't lift it. And that was an aggressive short on my end. And you still have the entry to place your stop outside of that structure. So you still get similar entry, just a little bit more of an aggressive entry, but you still get that similar stop where it's outside of the structure. So yeah, I agree with all of you guys. You don't know if you're going to get that
nuances. Nuances. Great.
But the nuances is kind of devil in the details. Is really where I don't know how you. I mean, I just kind of think in the bigger pictures for any career. Like it's like, oh, okay, I can get up and running and get 50, 70, 80% there in a couple of years. But then it takes decades to get that extra 20%, and really become a master. And it's all in the nuances. Keep, paying attention and replaying and rethinking, bouncing ideas around in the community. This is where the nuances, I think, you'll be exposed to them, and then you can make decisions for yourself and try them also in replay mode. Anyway, we're starting to beat it to death, I think, here, John. If you had any other comments or follow-ups. Okay.
No, you got it.
All
Great
right.
trading, John. Great trading.
thank you, sir.
As always, and your markups, that kind of this intent here. I mention it every time. The clarity in here. You know what you're looking for, and the more time you spend with this, and the more you start to understand these nuances in here, the easier it will be to understand this kind of thing happening. That's what he was looking for. Above his key level, the trap, looking for the aggressors, and then it moved. So, it's kind of a little bit of foresight of like what it might do. Anyway,
Last point I wanted to just sneak in here real quick. We were talking about risk to reward earlier, and how you let the dynamics of the market determine your risk to reward. You see the liquidity where my target is. You see where my stop is? That's your risk to reward.
Right.
And that's certainly greater than 2-to-1. It's huge,
Yeah.
right?
Yeah.
So that's, and it kind of goes to what David was talking about. You want to map out that liquidity and determine, is this worth it or not? And in my view, because of that dense liquidity down there, that trade may be aggressive in some eyes, but when I have that much daylight before I hit a target, I want to take that all day long.
Yeah. So yeah, here is your reward.
That's your reward. Yeah.
And then here is your risk.
Yes, exactly.
You know, so I don't know how many of these fit into that, like 4 or 5, right? So so you know, like a 5-to-1 basically. But then that's the question though, John. And like I said, I want to share actually some of the modules with the coaches and you guys before I release it. But like at that point, are you going to take 2 or 3, or are you're going to say like, wow, this is a really good opportunity, and my stop is this much. I will lose this much for the day. Therefore, I'm going to put on 5 or 6.
You see those red dots coming down after the little pullback?
Right here.
I'm adding.
Okay.
Pavlov's dog has nothing on me. I am just happy.
You've been hanging around David too long. That's what the
exactly it. I'm trying to catch up.
Nice.
Yeah, that's
very,
how that goes.
Very nice.
Once I see it start going my way, it like that, with everything going for it. Yes, I'm adding. I'm scaling.
Nice.
Okay.
And then I'm done.
Beautiful.
Yeah, and then you're done for the day. Walk away.
Then I'm done.
I mean, it's tricky. Again, it's knowing your setup really well, because a lot of times, and sorry to belabor this one, guys, but it's good stuff, and we're on the right track here with I think talking about the risk management, etc. Now he's going to be adding in a lot more risk here, right? So he's in here, he's adding more risk in here. Now his break even is probably, I don't know, down here someplace.
Bring it down.
Right?
Absolutely.
So maybe even a little bit lower, depending on how much he got in here. So now his stop is way up here. Now his risk to reward is different. It's this to this, right? So now it's like 3-to-1 maybe. It's still really good, but it's been it's been kind of diluted, or
but that risk wouldn't be as great up there, Bruce. I would be bringing my risk down to like 22.5, 22.75, something like that. So I would, as soon as we start falling here, I'm adding. I'm bringing that stop down.
Yeah, I'm just want to.
Okay.
I follow you, and I'm not. There's no like with some of the comments to DNT and you. It's not about like one way is better than another. I just want people, or I think it's good for the discussion to talk about these things, so that people understand the risks and the ways to kind of mitigate them.
Yes.
What's really on the table here. Because how many times if you don't know your setup really well and you're like, oh, cool, I'm going to add in more here, and now your risk is down from this little bit up here, now all of a sudden it's here, right? And it goes against you. Now you have a big loss.
Right.
And then it really screws with your head, and it really screws up your trading plan, because now you got to dig yourself out of a big hole. So how do you want to deal with that? And that's a big question. So you really have to know your setup, and when it looks really good to you, then you pour it on, I think. And that's going to come through experience. Anyway, all right, now we definitely beat it to death.
Thanks.
All right, nice stuff. Let's see, who else do we have in here that we can go over? Vinfra, and then we also have Nan. So those guys, Nan, you're on deck, and Vinfra, you're up. So let's and then Laura, you're in the hole. So we got three. This is all baseball analogies here. So, all
Lovely.
right. So, Vinfra, got it. Okay.
So this is an oil trade, which is nice to see. I have been trading quite a bit of oil lately.
And let me get Vinfra up on the stage.
Perfect.
Okay. There he is. Okay.
So this is a
Hello.
trend.
Hello.
Hello, fella.
How are you?
Very well yourself?
Yes, fine, thank you.
Excellent. So this is your oil trend line break trade.
Yes.
Which is good to see. We've got. I'll let you talk about it very, very shortly. Price scooting down, going down, and then we just get that break. We get the volume coming in, change of structure, lovely entry. You've got some bullion coming in as the price moves up. You've got your take profit in terms of where the levels are. Really simple trading, but very effective trading. So let me hand it over to you, please. Talk us through.
Yes, well, you have said everything. So I saw the elements of the setup, the points of the setup, the passive accumulation. That was key, and we are near the key level. And then I try now to consider the picture, the bigger picture. Before I was drawing, and it seems to be ridiculous, but it's important, and that's why I check a lot of Nan, Taboho, and others that do the same. When we have a bigger picture, we have more idea of what happens. Before I think I should have done a little trend line, even at each move down, and now I try to do one grid picture, and that's why I have better entries. I have a better idea of the structure, the horizontal structure that developed, or the break of the trend line that make a structure. And I see also that the break of the structure, there's not one structure that are broken, is two or three.
Nice.
Today I did a replay and I have three breaks of structure. So that's important to say for me, because it's a change in my way to do. If I have a bigger picture, and when I zoom in, as Bruce said earlier, when I zoom in, I lost a lot of things, and so I have to zoom out and have a bigger picture of the scene, because I can, if you play I don't know, you play soccer, okay, you can watch your ball, but you don't see where are your friends and where are the other team. So you are blind at the end of the day. So that's why I think I've changed something in my way to do it. It's a TLBA, so it's the second one of all the files that Bruce sent to us. It does not mean that I only trade twice. I trade some feeds more than 5 or 6, I think. But now I think I have changed something important in the way to see the markets, to see this picture, and then it's more, it's easier. It's easier to have better entries. It's easier to have better stops to do. And then for the rest, well, the profit I target the swing above. That's why you have a yellow line there, and that's it. I was hesitating to target the liquidity above, but I've chosen this line, this swing, yes, there, and that's it. And it corresponds to with if you go further to the right with the rectangle, there is a low volume node there.
Here?
No.
Or here?
Higher.
Yeah.
Yeah, there.
Yeah,
Okay,
beauty.
that's why I target this.
Yeah.
Nice.
So that's it.
It's a dollar move on oil, and that's a lot. that's a lot. The key thing I love on this chart, Bruce, before I throw the mic around, is that liquidity coming in. Now, I appreciate this was last summer, so we didn't have all the constant news coming in from the Middle East, but that extra liquidity that comes in at 72.50, Bruce, when it you see that a lot in oil. Now, if you can pull out the chart, Bruce, I don't know if I added it a little bit later, so I don't know if your file is live, so it's got additional charts in it at all, Bruce, if you're able to.
I'm sorry, which one? Do you sent something in, or?
Yeah, so are you able just to collapse that screenshot? I don't know if there's lower down it in the file. Is it? No, it hasn't. Okay, let me just stick this into the. Let me just pop this into the chat. But those things to me are really, really key, where it comes in like that. Let me stick that into the chat. Sorry, guys. Right. Hopefully that's in there, Bruce.
Yeah.
And
okay.
If you can bring that up. So this is from today. This is from this morning's oil. And again, when Dave was rambling on in spot as John will see, and I was highlighting where you've got all that bully liquidity coming in, Bruce. So I probably got a better screenshot of that. But if you can zoom in, you can see it coming in. You've got 3 levels of thick liquidity come in above the price. That area, and that is just so. It's such a tell to me. It really is such a tell, because it's saying they're going to push that price. They're going to push that price down, and they did. They certainly did, as you can see. Yeah, I've got a better one. I think you get the point. Let me.
No, it's a good one, David.
Yeah, I've got a better chart in the chat. Sorry, Bruce. So what I did, I posted the one there, which was after the event. You can see the volume came in. Yeah, the one that I've just put into the chart is before that. So I was flagging this to traders, going something is likely to happen. We've got structure. They've been trying to put the price up, and you can just see there's 3 thick levels coming in that green circle, flagging that it's quite likely the price was going to tank down. And as you saw in the chart I've just posted, it did. But look out for those on oil. I'm labouring the point, traders, but that's one of the key tells. John, help me. You trade a bit of oil every now and then. No, I don't.
Yeah. If we can go back to the trade, Bruce.
Yeah.
Okay. Great on everything. I just want to revisit the decision for the target. I see where you placed it, and I understand what you were talking about. And your technical analysis tells you that there's a pivot there and a low volume node. What the market's telling you is that they're interested in selling at 73.30 and 73.70.
Yeah.
Yeah.
So at 73.30, you've got $1 made. You risked 30 cents. I'd be taking it at 30. I wouldn't want to take on that fight, because again, that's where order flow analysis comes in. It's looking at what the market is telling you, where they're interested in engaging trade. Like I said, you may turn out to be right and it goes up there, but you're going to have to jump that fence where the market is telling you 30 and 70. But other than that, I loved everything you did. That's the only thing, though. I try to be the most consistent You front run that liquidity because you see what happens. It bounced off of 30 and you had to absorb 40 cents a drawdown there from your maximum profit potential. Now you went back up and you got it. I just try to keep that 40 cents of drawdown off my heart and just take the trade when it goes up there and gets that liquidity, that nearby liquidity. You see how that can add consistency to your trading.
Thank you.
Nice.
Yes, sir.
Let's turn it over to trading is life. No? Are you there? Oh, it looks like he left. All right. And D&T.
Okay, so the CL is it looks, if I'm not mistaken, it often does this, right? Where it's it takes a while for it to like break out. Do you guys see that often? I haven't really traded CL that much, but it seems like it's more macro driven. I could be wrong, but it seems like larger. It's heavier to move or something. Is that kind of sound about right?
It can definitely range at the current markets we're in, less so, but it can range. I'll stick a chart in from early on. Then it can range for a while. Volume comes in, and then it does move, and it can move at pace, as everything can. Yeah. So you need some patience.
Hard to say, but you do see you see a huge sweep at around 11, and that huge sweep is telling us something. That's the first thing it's telling us, is this huge sweep, and then you get really large sellers down there at the very bottom of that sweep, and it goes up, and then you get a pullback, and it tries to retest that low again, and this is where waiting for the market to kind of show its hand, waiting for the market to where that really pays off in this one, where the previous trade that we just saw, which was John's trade, where we're entering more aggressively, and that was a similar trade, I think, whereas similar to the trendline break accumulation, where the market was going up and up and up, and then that was a more aggressive short, not really waiting for the market to show its hand. This is a little bit different, where you get this strong sweep down, and then you get it pulls back up again, and then it tries to retest that low. The market is telling you something right here. It can't retest that low. Plus, you got that huge sweep with those sellers down there at the bottom of that sweep, and now it's starting to break higher out of that trend line, and you're still waiting, and then you bought the break of that trend line, and then it pulls back a little bit, and then it goes, right? I mean, this is where kind of waiting for the market to show its hand pays off. I noticed, like, when I was doing these replays with the trendline break accumulation, it's easy to do what you just said, Vinfra. And in the real market, you carry that same behavior over to the real market, where you start to just anticipate the break, or you're anticipating the market to show its hand, when really a lot of the times, like, trying to fade reversals is a really difficult edge. It's a really hard thing to build your edge around, because it's better to sometimes wait for the market to show its hand out of a reversal setup than it is to circle that right there, to that one to the right of his entry, just to the right of it, right there as well. So the market gives you a nice little pullback into the structure, and then it goes up again with heavy volume again, and that could, just to the right of your entry, Vinfra, could have been maybe another entry, because you're buying. It pulled back again, and they still couldn't take it. So sellers still couldn't take it, and then it takes off again, offering you maybe a safer entry.
Yes.
But this is where if building good habits in these replay files in trendline break accumulation is a really smart thing to do, where if you're anticipating the break and you're buying before it's reversing, and you're making these aggressive entries, you're going to take, I don't know about you, but you might if your findings, because I know you've actually been doing this for a long time, my findings is I was getting destroyed, and it's really smart to build good habits in this in these types of in these reversal trades, and I hope that's something that we're doing, that we're all doing, that we all realize, that we all recognize. If your guys' experience was like mine, anyways, that's all I really got to say.
Yeah.
Nice point.
Thank you.
Yeah. Good stuff. Vinfra, I mean, I won't have the last word on this. Someone else, but like, what DNT he kind of went into some of the nuances in here, and was really articulate about some of the things in here. And these are the things that, and making good habits. That's another module I will have shortly about replaying, learning, write down what you did right, what you did wrong, and then carry that forward. Just one habit, one good habit, one bad habit, and continue with the good, and get rid of the bad. Anyway, look at, I mean, your growth in here is tremendous. So you notice this, right? Okay, that's pretty easy. I mean, we got that in the setup, but this here is fantastic. So it's replaying it, or it's retesting it down here, and there's still more. And I think your entry is fine. It's great. It broke the structure. Here's your low volume pullback. I concur with DNT. Like, here, like it's good. It's aggressive. Here it's even better.
Yes.
So depending on how much, how many bullets you have, I don't know if you're you have enough. For replay mode, just hit singles, and deal with this drawdown. How do you deal with it? That'll make you a better trader. Anyway, great stuff. Another nuance in here I think is worth mentioning. John already very concisely identified the kind of taking away some of that risk by targeting swings or high liquidity. One more thing is look at another nuance. It's not really a nuance. It's really hitting you over the head. All this passive liquidity, it's going to be a big stop run, and then all of it's filled in here. But look at the buyers already, that pocket, right? And then look, this is like almost a low volume pullback. I think Steven just mentioned like a double bottom. This is it. This is the kind of divergence you want to see in that, and I don't even want to get into divergence and whatnot, but just look at the aggressors, right?
Yeah.
They're already starting. That transition's already unfolding. And then you notice it and you picked it up here, you got in, you managed it. Great job.
And that's why I think his entry makes sense, because that setup comes from the earlier accumulation that you mentioned, all that volume coming in there.
Yes.
So that's not coming out of the blue where he got entered. I think it's perfect where he got entered, because that accumulation is being expressed at that price point where he entered. I think that's lovely.
Yeah, good point. Because otherwise this is where it's not FOMO. We're talking about managing risk, and you may miss that. If you might not get this pullback. Anyway, some good thoughts. Good discussion.
Definitely. But take a look at oil, guys, because it is choppy and all those other things, but it is tradable. It is tradable. Says me. Yeah. Don't you think, John?
I do. Yes. I like it. Yep.
And just look out for the vol. Just look out for the vol. That's the thing. I'm going to try and... Sorry, Bruce. Give me my charts. I've just stuck another quick oil chart in there. Sorry, Bruce. David, let's ban you.
I heard same thing, though, David. I would like to probably trade CL if I...
Look at this chart here, guys. This is from this morning. blade is, that's Wesley Snipes on the blood. There's blood above, blood below. I got short because we failed to take it up. But just ignore where I got in and what I was trading, really. But just look at those volume bars.
Yeah.
When it scoots up, you've got plenty of buy volume. You've got a little bit of low volume pullback. Off it goes. Yeah, thank you. Look at that.
Yeah.
You know, Stevie Wonder could get along out of that, please. You know, and with oil, you don't need to go that far to make a lot of money. Yeah, and then it fails, and it fails. And the thing at the moment in oil, you've got the U.S. Treasury. This isn't David's story. Is the U.S. Treasury openly are short in this market? There's 2 million open contracts at the moment, OI, within oil.
Right. Yeah.
My guess estimate 20-30% are owned by the US Treasury, and they heavily short this or look to short it during ETH because the market's thinner. So my mindset is to short, buy short. But look, as you did, Bruce, look at on the right hand side, just that huge selling volume. And this is before the charts I was showing you, we were showing our own oil. So it was tanking down. But you know, again, when that comes in, what do you want to do? You just want to get short and make some bucks, you know.
Yep.
But yeah. Back to you, Chris.
Yeah, I sorry, like it doesn't really do it much anymore, but like that liquidity that you were talking about it's just a side note. It's something for people to take a look at.
Yes,
is not only the liquidity here, but this market, like years ago, the spoofing was just rampant, and I think there's still some of that, you know, in here,
Sure.
but boy, they would come in and you would see like 1, 2, 3, 4. It would be a block.
It'd be Scott Pulcini's spoofing.
Yeah, it all came in at the same moment, and it was all pulled at the same moment as well. So it's like, you know, that player has no intent to trade at all. And
pulling it around.
Yeah, exactly. And crude and gold too, but mostly crude is where I've anyway. Just keep an eye out for it, and learn to read it, like David's saying. Like, you know, that will give you a hint. If you get you know, I don't think this is spoofing because it's 72.50, but you get that and you get this here. Yeah, it's pretty likely to, you know, hit here. Anyway, it's a thought. Let's move on.
Yeah.
I don't know. Any more comments or no? Okay. All
No.
right. We're moving on.
Thank you.
Yeah, thank you, Vinfra.
Great.
Let's see. Really great progression, Vinfra. Really compliments.
Thank you.
Let's see. Nadia's not here. Oh God, we got her. Nan. We got Nan. So let's bring him up and let's see. And I wanted to go over Tomi again, because guys, I had maybe I'll just briefly go over it at the end. Something I think is important in the context here for the pilot program and for the academy. And let me get Nan. I don't know who had him. Oh, it was Moby. Okay, great. All right. Okay, and let's see. Nan, again, like kind of like Taboho, but I think even much better. I mean, the patience and the bigger picture outlook is phenomenal. Anyway, walk us through your trade. You're on mute. There you are.
Okay. All right. Thanks, Bruce. Hi, everyone. Coaches. All right. Okay, so I have two red lines drawn here. As the first one, was broken. It was somewhat doubtful whether there was a true trendline accumulation break, especially when price came down a little bit on that first move and then it went back up. But the 6,700 level actually was the key factor here. Either it would be broken or whether it would reverse from there. So I looked at it, I drew a second trend line, and on that second retest, it came down somewhat impulsively for about another 15-20 points, but I didn't see much large delta volume bars that would warrant getting ready for a setup. So I just waited and I looked at the previous swings prior to the first test, which would be around the 10-15 time frame. I looked at that swing there, drew a line straight across. Yeah, right. So I drew a line straight across, and that had multiple touch points in between that gave me a gauge as to, well, that could be a secondary structure or maybe a third structure from the two other trend lines that I've drawn. Then the volume began to come in. And at that point, I felt there was, I guess, enough conviction that there was going to be an actual rejection from that 6,700 level from the retest, the second retest. I waited for the pullback, and I got in there at that entry 60, 685 level, right there about after it came back down. I saw the first target at about 60, 670, that liquidity there. And so I had my eyes looking in that direction as an initial target. Once we got there, there was, that pullback, but I didn't think that there was going to be, any trouble rotating back downwards. As I look at lower liquidity, on a closer zoom in, you'd see much more liquidity than you can see on this chart here. So I constantly go in and out to gauge and analyze liquidity levels, and some of those white liquidity lines actually is much more attractive once you zoom in. There was good momentum with the volume bars on that first leg, so to speak, and then the pullback, and then it did one more downward move just prior to where I exited.
Here.
Price continued further down, but I was satisfied that this was enough risk to take on, and I was contented with the length of the trade at this point in time, because I didn't want to risk or develop the bad behaviors as DNT emphasize and be satisfied with it. So that's it in a nutshell. It was not a straight textbook trendline break and accumulation, but it met some of the guidelines and criterias, and drawing those mental and physical structures helped me to determine that we were at a good point for the reversal at the key level, and with liquidity levels below, the potential was good. So yeah, that's it pretty much.
Nice. Let's see. I don't know who wants to take it. D&T, why don't you go first?
Okay, Nan, this is beautiful. This is okay, similar to Vinfras that we just saw, but different. So if you don't mind, if we could go to look at Vinfras real quick, if that's not too much of a, it's on your other tab. Okay, so I don't really know what's going on the left, further left, but we can see a strong impulse move down, and then it pulls back up, and then it makes another large impulse down. So this is kind of like an extension. Now we could go back. This is like an extended move, like a second extension, and then we could go back to Nans. Now, if we look here at 1120-ish, this is really like the first extension, and we can see further left on Nan's chart, this is looking a little bit more like a balance trade. See, the market's coming down, and then it's chopping its way back up, and then it extends higher up on the far left. And this is the first extension. Now, it's not overextended. It's not like extended like how Vinfras was. Vinfras was extended, and it looked different. It was a different setup. And this one here, it's going even further to an outside edge. It goes even further than the previous high. So this extension up to that liquidity at 6,700, the second extension at 11 o'clock here, that's almost like that second extension. So it's like balance, and then in balance, you're looking for that outside edge. And of course it does it. Anybody who got short at 11:45 getting stopped out, and it goes into that liquidity that came back in the book at 6,700. Then it exhausts, and then the market kind of shows its hand at 11:15. So this is a little bit different, and you can see the context difference between Vinfras and the context different between this one. Vinfras looked a little bit more like a trend down with a strong sweep on the second impulse down. This one here is more like balance, where it's just get the strong move up into that heavy liquidity, the first move up into that heavy liquidity, and then it looks like it's going to do that trend line break accumulation. But what does it do? What is the market in? Potentially balance. So it goes even further to an even further outside edge and takes that liquidity again at 6,700, and then it comes down. Just a different potential context, different potential setup. Recognizing these things might be able to help out a little bit. Just some things that I've noticed here.
Okay.
I think this was an awesome trade. And your entry, this was, I think, a really good patient entry as well, because 11:15 the market starts to come down, and then it tries one more time to come back up, and then it fails down below that previous swing low it just made, and then you shorted it once it broke down right there, boom. And you go to the previous swing low that it just made, slightly to the left, right, 11, right, a little bit lower, a little bit lefter.
Here.
Right there, boom, breaks that, and you see all those sellers just hammering it, and then you get the liquidity on the offer right above your entry. I think this is just patient. I don't know this, but I'm assuming that I don't know, like, did you recognize the context like pretty well? Is this what gave you patience?
Yes. Yeah.
Okay. I mean, I think it's beautiful. If you can.
And I should mention that if Bruce, if you were to zoom in, I actually had, and it's labeled as the main target, the 6,650. I actually got stopped out on this trade, and if you look at the very extreme right, it actually went down to the 6,650 eventually, because I followed the trailing stop was too close, so I got stopped out there. But
Good point.
nevertheless, I was contented with it. But as you said, DNT, where the entry took place, we had a couple of, if I draw that horizontal line straight across, which Bruce did earlier on. There were quite maybe a 3 or 4 touch points. So I figured that was a sort of a break of that downward turn, and
66,
just judging
87,
from
yeah.
past experience, it's a good indication for timing an entry.
Yeah, and I think you brought up your entry or your take profit at 66.50ish, because that's the opposite side of balance, and that is a home run. That is a home run. That is what you can hope for in balance. It doesn't always get there, but that is a home run. Going from one end of balance to the opposite end of balance is where I think that's what you're trying to say. I think that's perfect.
All right. Yeah. Thank you.
All right.
And that's all about like a really good context read, and I applaud you on that.
Let's see, John, you want to, guys, we only have a few more minutes left, and I would like to, I mean, everyone can kind of leave. I would like to go a little bit over, I'm not trying to hold you guys, but a little extra session because of exactly of this kind of stuff in the middle here. And the distinction between that and the low volume pullback. Anyway, I'll turn it over to John.
I think I know what you're going to say, Bruce. So I'll yield. I'll let you go ahead and go. I think I was about to say the same thing, but go ahead.
Well, why don't you say it? You're probably going to say it more articulately than me.
Nah. No, thanks. No, I'll let you go. You go
okay,
ahead.
I'm going to turn it over to David though, and then I'll come.
David's going to put his foot in it. Yeah, here we go. Completely mash it all up. All I'm going to add in here, the great things, great charting, great trading, etc. Love all of that. It's a century level. If we had HE with us, it's a century level. And we've seen this today a lot on my NASDAQ trades. We get up there and it's almost a given. It's going to pull back aggressively from there. So for me, when it's through that area there, we can say there's higher lows, lower highs, whatever. But in my mind, the price is going to fade back from here. Soon as I see the red bars coming in, I'm shorting.
Me too.
And I'm going to do a John. I'm going to short with a 4 handle plus stop above it. And the trading gods are with me, or they're not. Yeah.
So would you be in here, David, or would you be in here?
Yeah. I'd be in by that. Yeah.
Okay.
Yeah.
Because
and if you look back today, you've seen it time. John,
the failure above at 250, those large volume dots, those large volume bubbles just above liquidity at 6,700, they're all failure. They're all trapped up there, and so they're gonna
bleed.
They're gonna give up pretty quickly, and I want to join them.
Yeah.
So I think he had great patience, but
you guys are a little more aggressive, and you're looking at this structure, and you're looking at the key figure here, or the big number or big figure. But makes sense. Nan, I mean I do not want to kind of rock the boat with your patience and your because like this entry is fine because of the read in here. And that context. I mean, there's risk that it hits this liquidity and you get one more bump up, and and then maybe it turns into something like this, so it comes up and then it comes down maybe, but like anyway, I there's some risk there, but I think it's fine because of the context that you mentioned. Another thing to work on or consider is, and you mentioned it, you trailed too quickly. The way we've been going over it, and I'm sorry, I love your work. I'm not trying to be too critical. It's just some ideas here. Once it breaks a structure, okay, then you trail it down, but you're still trailing behind another structure. So it's still, you would be trailing it down to here, basically, and you would have still been in this. So anyway, it's a replay file. Go back and replay it, and see if that works for you. So the rule is like, let's suppose you got in. Suppose you got in here. Okay, comes back, it retests. Now it breaks here, right? And then in this case, I mean, yeah, you'd kind of keep it up here. I mean, I guess you could. It'd be more aggressive, but like here's another little structure, and you'd move it to here now. That's kind of aggressive, but like you get the idea. You're trailing by, you're giving that breathing room by trailing it by another structure. Yeah. And because this is within the structure, and that's why you got taken out. Yeah. So just you, God, I even hesitate to say like give you suggestions for improvement because there's not much. These are just nuances. The thing I wanted to mention was, and this is a big problem I think people are having, and I get it, is this stuff up in here, and then how does that turnaround take place? We need to see that turnaround from buy side to sell side, right in here is starting to, we see this all the time on this trend line break accumulation or any kind of reversal, is you start to get the pocket in here of that selling, right? But it's still going back and forth. So buyers, they take it one more time, they hit that high liquidity, hit the big figure, then like now you're looking for the next barrage of selling where that likelihood of it coming down into some of these previous structures is pretty good, or maybe it will start to trend and you get the bigger move. So the distinction here, and where I think people are getting confused, is and I get it, like how oh, is this a low volume pullback? No, it is not, right? Because this is just back and forth. This is chop, and it's erratic in here in the price action, and then you even get this huge spike in here. Now it's going to be a stop run up through here as well. So you can put that into context as well. But like now you're getting interested. So you even got kind of like shoulder, head, shoulder type of thing. It can't make the higher high, and the lows are this trend line break unfolds, and then you were looking at that previous structure in here, and then that broke, and that's when you got in. So that's great. Anyway, this can be tricky in here, and I would just encourage people to look more into detail on compare it. It's easier to visualize here. Here's buy side, here's sell side. Now I don't see the transition yet, right? And then here's a little bit of buying, but now more selling, right? Well, one big last spike. Now you're looking at context, like DNT had mentioned in the structure, the key level, the selling starting to pick up again, and when that structure starts to break. And you start to see the selling. I think this selling in here is really kind of, now it's starting to hit you over the head. It's getting ready. Yeah. And then it's a beautiful move. Now this is where people are getting in trouble, is because they're like, oh, it's passive liquidity. Oh, it's getting filled. I'm ready for the reversal. Here's my selling. We should get in, and then boom, they get stopped out, right? And you got to wait. This is chop, and then you got to wait for that transition to unfold. The low volume pullback is another one where maybe I can bring up Taboho, or not Taboho. It was is a good one here of Tomi, I think. Yes, let me bring this up quickly, and then we'll wrap it up. But no, this is okay. This is something else. I'm sorry. This is the low volume pullback is good in here. It's just like he didn't let this work out. His trend line here is just too. it's not looking at the bigger picture. So got to zoom out more. Let these things play out a little bit more. Taboho, you've mastered that. Vinfra, you're now mastering that too, which is really, really great to see. Let me see if I have another example in here. Because some people are calling these things a low volume pullback, or no, a trend line break in accumulation, and it is not. It is a continuation pattern. I'll have to find, I thought I had an example, and I can't find it, but the key is this in here, and understanding, like, if this is they're in control, and they continue to move it, and you don't start to see this transition or this back and forth unfolding, these pockets, right? Then, and this is like half, if this were like half of the distance or length or height, I'm sorry, or even less, you're not looking for a reversal. Now, it may happen way over here and it just all of a sudden tanks. It may, but what it is telling us is, even though there's lots of passive accumulation, we're looking at it's going back and forth in here. It's accepting, and there's low selling in here. So we're actually looking for maybe they kind of hit below, test it down here in the auction, and then do something like that, right? So I think just keep an eye out, and we'll go over it again and again on this stuff in here, and that's all. So Nan, I'll let you speak because you traded this just great, and your patience and your higher kind of bigger picture outlook on these things of understanding the structure and the context is excellent.
Yeah, thanks, Bruce. Trading with the bigger picture is, for me, it's something that I was never used to. So I that baggage came with me when I started looking at Bookmap, because of the difference in time frames and how the chart appears versus candlesticks. So I had to get used to that very quickly. But once I put away and put aside candlesticks and focus only on the picture that Bookmap is telling me, then I began to understand the perception and the conception and all of that. And Bruce, your training and the weekly and daily webinars have helped me to draw structures and mini structures and so forth. So I'm always, drawing dynamically as the trade, as the market prolongs, to see if there is anything that makes sense. And if it doesn't make sense, then I'm not interested. I do something else, and I come back and look at it later on, especially the area of consolidation near the 6,700 level. Those can be found each and every day, a couple of times at least, and they can prolong for 2 to 3 hours.
Right.
And so I've gotten into understanding when it's going to break out, or the potential of when it's going to break out. So I draw a rectangle within that range, and I look for patterns that tells me, when it's going to break out. And sometimes it will break out in one direction, but it's truly going after stops, and then it ends up breaking in the next direction, the reverse direction. So you have to look for that. But as I learned from David, the big red volume bars, I'll take it note of that, David, and that
Perfect, sir.
to me makes a difference, along with some other things, and the stops and so forth. I appreciate your feedback on the stops, Bruce, because this would have been a bigger trade, but I think as the momentum continued with this trade, I reached the pattern of the distance with the stop, and I became more aggressive with it. Hence, I paid for it by the being stopped out. But overall, thanks for the opportunity and for all the feedback, Bruce and coaches.
Yeah, you're welcome. Well, thank you all, thank you coaches, and Academy members. You guys are, I mean, it's hard to keep up. Doing some really great work, and I see just dramatic improvements. I can only hope that, or only think that this helps tremendously, which is really, really great. That's what we're here for. Let's see. DNT?
If you don't mind. Yeah, sorry. I just wanted to butt in one more time. If I wasn't too clear on the context thing I mentioned before, I drew a diagram overlaying on top of what Nan did about the balance context. The far left of the image that Nan included tells us a lot. So Nan including that move down, I think, is trying to tell us something. That it's like kind of like a balance context. And you get that first extension up, and then you get that balance context again where it goes even further up. You get that second extension, and it tries to retest it, and then it fails again. So just to kind of clarify with the visual image, hopefully it helps to elaborate on what I was kind of trying to say earlier. That's all.
Okay. All right. Thank you, DNT. And whose turn is it?
DNT.
Not
DNT,
mine.
take it out.
DNT.
It's definitely not mine. I screwed it up last week. Somebody else could screw it up this week.
What do you mean you screwed it up? Like, did you go last week?
Yeah.
Oh, okay. Okay. Well then, pick a number, David and John.
Let's give it to John.
1 and 10.
Give it to John.
Okay, John, you're up. You're up, John.
I'm up. Yeah, it's time to go. I think the Academy is working, Bruce. I started here 18 months ago, and it's amazing to me. Each week, the charts get a little cleaner, and we're only including things on the chart that helps us to make decisions. So I think the Academy is working in that regard. The charts are concise, and they're better. The trades are better. So I encourage you to keep posting and come in each week. And I'm happy to be here with you each week, and I appreciate the time. And I'm so late. So good night, and we'll see you next week.
All right. Thank you all.
Awesome.
Thank you.
Cheers, traders. Good night. Take care.